Hey, what's the deal, big dog? So glad you could join me here inside of Module 6. Well, we're going to help you develop your own trading plan. Now, the reason being is a well-crafted trading plan is essential for your success in the financial markets. It serves as your personal roadmap, guiding your decisions and helping you to navigate through the complex world of options trading. This module will explore the key components that compose an effective trading plan. We'll cover goal setting, strategy development, as well as creating a personalized approach to trading for you. Let's get started, shall we? We have the importance of a trading plan. Now, a couple of the reasons why a trading plan is so important is, first and foremost, is the consistency. As a trading plan provides a consistent approach to the financial markets. It helps you to avoid emotional decision making and stick to your strategy. Because if you're not in control of your emotions, your portfolio and your account will surely show that and mirror that. But being consistent and having a trading plan to stick to, having the discipline to stick to it, will help you in your efforts. And we got the accountability, because with a plan in place, you can track your progress and hold yourself accountable for those trading decisions that you're making. I always like to tell people, you want to keep you a journal and write down not only your trades that you're making, but how you feeling while you're making them. So that way you have something to go off of when it's time for improvement. And we got, of course, a well-structured plan will always include risk management strategies. Reason being, this helps to protect your capital and ensure long-term sustainability. I always tell people that the name of the game for options trading is not how much money can I make from this. It is always how do I ensure that I keep as much of my money in my pockets without having to blow up my account. Once you're able to maneuver through that, you'll start to understand and you'll start to see the opportunities that the market presents us with on a day in and day out basis. But first and foremost, you always have to make sure that some type of risk management strategy is in place. Then we got continuous improvement, because your trading plan will serve as a framework for continuous learning and improvement in your trading journey. Options trading isn't one of those things to where it's like in your favorite video game, you get to the last level, and once you get to that last level and you beat the last boss, now options trading is over. You've done everything you need to do. You can just keep moving on to the next thing now. Options trading is not like that in the slightest. What it's more so about is always sharpening your sword, always improving on whatever it is that you got going on. I always tell people, even if it's not broke, I look to fix it in my options trading. Creating your trading plan. Now, when we creating your trading plan, first thing we want to do is we want to start with a self-assessment. How you do that is you begin by evaluating your trading knowledge, your risk tolerance, as well as your availability and the time that you have that you can allocate towards options trading. There's a couple different styles of trading, and they all need their own specific amount of time in order to get them done. So whatever amount of time you have that you can actually allot to the market will basically tell you what type of trader you have the ability to be when first starting. Then we got defining your goals. The way you do that is you're going to set clear, measurable trading objectives using the SMART framework. I'll get into that a little bit later. Then we got choose your markets. You're going to decide which markets and instruments you'll trade based on whatever interests you and your knowledge and expertise on that area. Then we got developing your strategy. What I'm going to need you to do is you're going to create a specific entry, specific exit, and specific risk management strategies that all of your trades must follow. That's the best way to ensure that you actually have something to trade with at the end of the day. Because without those three things, I can assure you, more times than not, you'll end up with no money in your account and you're going to have to wait until payday to get some more money to trade with. The SMART Goals Framework. Now, SMART Goals Framework is a framework that I created for beginning traders to help you to be able to basically map out what your goals are, because I can assure you, you won't hit a target that you can't aim for. And most people, they can tell you exactly what it is that they don't want to happen out of life. But if you ask them what it is that they want to happen out of life, probably hear crickets. Reason why that is you get what you focus on. And that's what we want to focus on. We want to actually focus on our goals and hitting them. So we're going to start off with being specific. Now you're going to clearly define what you would actually like to achieve in your trading career. Of course, you don't want to lose all your money. That's a given. But what is it that you would like to achieve in your trading career? Now, best way to go about that is by being measurable. And how you do that is you set quantifiable targets to help you track your progress effectively. Then we got to make sure that the goals themselves are achievable. And you got to ensure that your goals are realistic given your current situation and understanding of options trading. Because I know when I first got started with options trading, I was like, oh man, I'm trying to make $100,000 my first trade. Let's go. But what I came to realize is I didn't have the mental capacity and wherewithal to be able to even get myself into that type of trade. And even if I found myself in that type of trade, I wouldn't have known what to do with it. So always make sure that your goals are achievable by you in your current state. Then we have the relevancy. Now you're going to align your goals with your overall trading system and your financial objectives. Because what I don't want to happen is I don't want you to be using a shotgun like a baseball bat. I want you to actually figure out what your style of trading is, what your system is going to be, figure out when to enter and exit your trades, how much you're willing to risk in your trades, and make sure it's relevant for where it is that you are trying to go. Then we got time. Best thing you can do is to establish a clear timeline for achieving your goals. Now, the way I like to structure things is I like to think about things from the end and the beginning. So what I do is I figure out where it is that I'm trying to go, and then I map out the steps that I believe I'm going to need to achieve in order to get that main goal done. So instead of, okay, I'm trying to get my year done, but instead of just thinking about the whole year in one sitting, how about I break down a yearly goal, then I make a quarterly goal, then I make a monthly goal, then I make a weekly goal, then I make a daily goal. Now, understanding where it is that you place in your time frames will help you in understanding how it is that you're going to get there instead of just trying to climb an entire mountain in one step. Developing trading strategies. Now, of course, first and foremost, we're going to start off with the technical analysis, man. They don't call me Stock Chart Shawty for nothing. So what you're going to do is you're going to use chart patterns, indicators, and price action to identify potential trade setups. Some examples of how you do that is using moving averages as levels of support and resistance, RSI to get you a read for the temperature of the stock, and then you can use MACD for telling you the direction and the momentum that a stock is heading in and with. Then we got fundamental analysis. You're going to analyze economic data, company financials, as well as market trends to inform you in your trading decisions. Now, some examples of that would be taking a look at earnings reports and playing off of them. It's a little risky for my liking, but everything ain't for everybody. You got economic indicators, understanding, where the actual economy is in the companies that you're trading. Then you got sector analysis, because what I don't want you to do is I don't want you to be like, oh, well, this is going on over here in tech. Well, let me go ahead and get something in financials. I have to understand you always want to be comparing apples to apples and never be comparing apples to oranges. Then we got sentiment analysis. Now, that's going to help you to gauge market emotions as well as crowd psychology to anticipate potential moves and reversals in the stock that you're looking at. Now, some examples of that would be looking at analyst forecasts, checking out the put call ratios for not only the market overall, but for the company or ETF or asset that you're looking to trade, and then taking a look at the fear and greed indicators. Establishing trading criteria. Now, first and foremost, we got to figure out how we get into our trades. Now, the way that we do that is we define specific conditions that must be met before entering every single trade. This may include price levels, indicator signals, or news events that's going on in the market. Then, after we figure out how we get in, next thing got to be, where do we get out? So we have to establish some exit rules. How we do that is we establish clear criteria for when to exit a trade. Not only for taking profit on our trades, but also for stopping the bleeding when we're in losing trades. The way we do that is you use take profit orders when you're up, and you use stop losses. You use stop loss orders to ensure that you don't have to lose everything in your trade. Next thing you want to focus on is position sizing. You want to determine how much capital you're going to allocate in every single trade based on your risk tolerance as well as your account size. You know, you might see certain people taking certain trades and purchasing a certain amount of contracts or getting into contracts that cost a certain amount of money. But what I don't want you to fall into the trap of is I don't want you to trade someone else's portfolio. I want you to always keep in mind what it is that you have in your account and in your portfolio, what your goals are, and where it is you're trying to get, where it is that you're trying to get to with options trading. Because the one thing I can assure you of is this: as long as you have your target in mind at all times, there won't be any reason for you to walk away from where it is that your goals are trying to take you to. Then we got risk management. Now, you're going to set rules for maximum risk per trade and overall account risk. Consider using the 1% rule or similar risk management strategies. Now, what the 1% rule is, I'm not willing to lose more than 1% of my entire portfolio for every single trade that I take. So, meaning if I have a $10,000 account, I'm not willing to lose $100 on any trade. Once it gets to that $100 mark, take me out. That's where I place my stop loss is. It's at my 1% rule. So, creating your personal trading roadmap. First thing you got to do is you got to start off by defining your trading style. You got to choose between day trading, swing trading, or elite trading based on your personality and schedule. Because the reason why I put personality first is no matter how much time you got to trade, if your temperament isn't correct, or if your temperament does not match your trading style that you're attempting to equip yourself with, you're already setting yourself up in a losing proposition. It's best to figure out what style fits your personality first. Then after that, you establish your schedule. Then we're going to set some milestones. We're going to break down your long-term goals into smaller, achievable milestones to track your progress. So instead of, something that I learned is, instead of making the goal how much money you make the goal how many trades you take. That's the reason why paper trading is so important. But instead of saying, I want to make $1,000 my first day, or I want to make $10,000 in my first month, how about you take your first 100 trades and then see what that does for you. Once you take your first 100 trades, you'll be able to get a better understanding. Because I don't care how many trading books that you read. You can read 100 trading books. But if you take your first 10 trades, it'll teach you more than those 100 trading books will ever. It's all about actually getting busy and getting in the paint and being willing to go and get dirty and figure this stuff out. Then we got continuous education. You're going to plan for ongoing learning through books, courses, and mentorship to improve your skills. Now, of course, with you being here in the Profit Pioneers, you got all three. You got books, you got courses, as well as the mentorship to help you sharpen your sword. Then we got regular review. You're going to schedule periodic reviews of your trading plan to assess performance and make the necessary adjustments. Because what I don't want to happen is for things to, even no matter if they're going good, but you not checking on and documenting your process, because eventually they will start to go bad. And even if it's not terrible, it will veer off from how good it's been going. And once that happens, it's easy to start to over trading and over leveraging yourself in trades, because it's not about you trying to take advantage of the opportunities that the market is presenting. It's about you trying to prove to the market that you're right and it's wrong. And when you get caught up in that cycle, it's not too much longer until you have an account balance of zero if you don't know how to manage yourself. So always regularly review your trading performance. That way you can figure out what it is that you could fix, figure out what it is that you're doing better, and then hone in on that. And then, of course, we have implementing and refining your plan. As I was saying, you want to have the daily reviews, you want to have weekly analysis, you want to have monthly performance review, as well as your quarterly goal assessment. Every day, every week, every month, every quarter. Never let time pass without you going over and adjusting whatever's necessary that needs adjusting, or you doubling down on whatever's working and helping you get you to the next level. Appreciate you joining me in this module, and I look forward to seeing you in the next one. Love is love.